The tradition of buying gold on auspicious occasions like Akshaya Tritiya is a part of Indian tradition. According to religious beliefs, buying gold on auspicious days will bring them prosperity and good luck. This year, Akshaya Tritiya will be marked on May 3rd. People buy all forms of gold ranging from coins to jewellery to digital gold. Meanwhile, the demand for gold jewellery has increased by 11% yearly. This is 40% higher than FY20 levels, according to a data from ICRA's FY23 estimates. Hello and welcome to Commodity Champions. I am Manisha Gupta, and to discuss the demand for gold jewellery this Akshaya Tritiya, I am now joined by Colin Shah, who is chairman of the Gem and Jewellery Export Promotion Council. We also have with us Surendra Mehta, who is national secretary at the India Bullion and Jewellery Association, and Chirag Mehta is from Quantum Asset Management. Gentlemen, hi, thank you so much for joining us. And gold clearly has been in conversation since the time it hit all-time highs, and how it has been volatile in the last couple of years, making some days a movement of $20 to $40, even $50 per ounce there. I want to start with you, Colin, first on the kind of demand that we've seen in the domestic markets and the international markets as well. How has the COVID period been, and 2022, the way it has started, with most restrictions now being eased off, especially for the Indian markets? How do you see this year?
Thanks, Manisha. So last year, like we know, and it's in the news since the last couple of weeks, we had all-time high exports of close to $40 billion, and it was a 55% growth compared to the previous year, the COVID year. So demand has been extremely strong in our main markets like America, the Gulf, China, and most of the Western nations. While of course the pandemic did hit the demand during the second lockdown, especially in India. But luckily for our export industry, the rest of the world was open at that time. Having said that, we did see a bull run on gold, and like never before, I would say. So when we are talking of Akshaya Tritiya in 2019, the gold price was, I don't remember the exact number what it was on Akshaya Tritiya days, but was between 32 and 35,000. And the guesstimated business which was done in India at that time during Akshaya Tritiya was 10 to 15,000 crores. Then of course last year during the second lockdown it drastically dropped because Akshaya Tritiya didn't really account for much during last year. But this year we are estimating that it will be a 5 to 10% growth in value terms over 2019. Of course in terms of kilos or tons, it won't be as high because of the high gold rate, and we've seen some amount of softness in the last month. So in the last 4 or 5 days, retail has picked up a little bit, but overall April was slow. So exports continues to stay strong. America and China is extremely strong. On the UAE front, because of the CEPA agreement which just got signed recently, our first export shipment actually left India on the 1st. And was received in Dubai yesterday. So that's going to be a big boost as far as the plain gold business export is concerned. The CEPA agreement.
Colin, I want to keep it to Akshaya Tritiya, and while people of course buy in India, do people in abroad also buy on Akshaya Tritiya?
The Indian diaspora globally, you said believe that Akshaya Tritiya is lucky, but it's not actually believe. It's evidence that whatever gold they've bought over the years has shown them massive appreciation, as good or better than most other investments that they've made. So the Indian diaspora globally, whether it's America, whether it's UK, the Gulf especially, Akshaya Tritiya is a very auspicious day, and people do go to stores to buy gold on Akshaya Tritiya.
And the fact that this year around we are looking at a lot of weddings as well. So if the first quarter wasn't so great, the second quarter actually is expected to be an improvement on that. Mr. Mehta, how would you look at this quarter to begin with? Because you don't look at just one day of Akshaya Tritiya, you look at the whole month as per se. Are the wedding buying, is the token buying, all of that coming? And with the kind of schemes and offers and new launches that you're looking at around this space as well, also are quite supportive. Is that encouragement enough? Is there enthusiasm because of this?
Definitely. See, what has changed between the last Akshaya Tritiya or the earlier all Akshaya Tritiya and this Akshaya Tritiya is basically one good reason to buy jewelry in India is because of mandatory hallmarking regime. This is the first time in the Akshaya during first big festival where we are looking at mandatory hallmarking. So apart from this, there are number of weddings in the country. It is expected to be as high as somebody can say about 50 lakhs wedding, or somebody says about 75 lakhs wedding. We don't know the exact number. Also, the gold prices have gone down in last 3-4 days, and because of this, there is suddenly a big rush in the market. People are moving out of their houses to buy the gold. A lot of freebies have been announced by the jewelers: 0% making charge, silver free with gold, and all other kind of benefits which a jeweler can offer during any festival season. And this Akshaya Tritiya is coming after the two lockdowns, first lockdown and second lockdown, where the jewelers did not have a good sale. In fact, in 2020, it was a complete lockdown, and in 2021, we could hardly get any sale during the Akshaya Tritiya because of partial restriction in many states. So I think this Akshaya Tritiya is going to be a grand festival as far as jewelry market is concerned.
Any comparison that the jewelry industry is making, Mr. Mehta, as compared to 2019 on what we could be looking at numbers this time around?
I see normally an Akshaya Tritiya would fetch a sale of about 20 to 25 tons of gold in one day itself.
Oh.
And I presume this year we can even cross 32 tons sale. Specifically with the jewelry sale suddenly rising. And one more important thing which I forgot to mention earlier, this time there are no sovereign gold bond existing. RBI has not announced investment in sovereign gold bond. So what you are left is with only gold ETF, gold coins, digital gold, and all sorts of gold which are in physical form. So there is no paper gold available as of now at all. So it's going to be a buying spree this Akshaya.
All right. So Chirag, that actually means spells out good news to you if there is no gold bonds to compete with this time around. So how is ETF looking like? How has been last couple of years, and do you see this one could actually be even better?
Yeah, so last 2 years, given physical buying was lesser, I think that deviated people to the right side of things. They have got explored to the world of electronic buying, which is again backed by physical gold. So the world of ETFs and world of gold mutual funds, where we've seen a lot of buying happening last 2 years specifically. If you look at last year, Akshaya Tritiya, we did about 280 crores roughly. Prior to that year, given that it was just a month after COVID in April 2020, where there were severe lockdowns, a lot of uncertainty, and people buying a lot of gold. So that month itself, we had 730 crores of gold ETFs being sold in that 1 month of Akshaya Tritiya. So we are seeing a lot of traction happening on the digital side of things, and people are exploring new ways and coming across that these are more efficient, reliable, no worries of purity, safer options and convenient options that they can, enter, exit at any point in time, extremely liquid. So we are seeing that momentum continue. Last fiscal year, also we added about 29 lakh new investors in gold ETFs. So we are seeing that real receptivity, and now it gained the mass appeal where investors are looking at it more favorably rather than just trying and testing it. So I think even after 12, 13 years of gold ETF existence, it's just 2 years where it's getting that receptivity that it always should get before. So now we are seeing that traction build on, and I think this Akshaya Tritiya will be really positive. I mean, there is a mass of people who are kind of attracted towards the gold backing that gold ETFs provide, and with the other advantage it brings. So we will see a lot of buying happening through gold mutual funds this year. and we will see that momentum continue that we have been seeing over the last 3 years.
Chirag, while you may not have competition from the sovereign gold bond, but the digital gold really seems to be growing quite a bit, and you don't even have to buy one unit as you have to do in ETF. You can buy as low as 100 rupees. Some are offering as low as 10 rupees as well. So there is clear that tokenization of the way you buying gold, which digital gold offers you. How is that market growing, and is that a competition for you?
So we've seen good growth in that market as well, given there are many platforms which are savvy to the new consumer, new age consumer that it appeals to. But even gold ETFs haven't stayed behind competition, and they've adapted to the new ways. Despite giving that wholesale price efficiency at a retail level, we have seen that now gold ETFs are also available at 0.01 gram of gold, which is around 40-45 rupees at today's prices. So that really translates to, matching the competition, and we have seen even that being taken care of by the gold ETFs and gold mutual funds. At one end, that digital space is growing, but again, it's being well competed by the gold ETF and gold mutual fund space. But there are clear demarcation in terms of advantages and disadvantages, given that gold ETFs and gold mutual funds being fairly regulated vehicles as opposed to digital gold, which is not a regulated instrument as yet. And also there are advantages from a tax perspective. For example, when you buy gold, you pay GST on it. When you sell gold, you do not recover that GST in most forms of gold buying. Whereas when it comes to gold ETFs and gold mutual funds, given these are GST registered dealers and they are pass-through vehicles, whatever gold you paid comes back to investors as an offset available to gold ETFs, which gets passed on to the investors again. So you buy digital gold, you pay 3% GST on sale, you do not recover that. Whereas whatever input is available for offset with mutual funds is passed on to the investor. So there is no loss of GST that you pay when you have bought gold. So that's a big important distinguishing factor between, say, digital gold and the gold ETFs. And I think gold ETFs and gold mutual funds do have an edge over these newer forms of digital gold buying.
All right, Chirag, we hear you on that. So there are tax implications, and clearly there is a tall standing when it comes to ETFs and mutual funds. But we need to stop for a short break. When we come back, we will talk about on what is the current factors impacting gold, what is a great price to look at going forward, and also what are the things to remember when you're buying gold, all after this break. Welcome back to Commodity Champions. I am in conversation with Colin, Shah. I also have with me Mr. Surendra Mehta and Chirag Mehta as well. Let me start with you first, Mr. Mehta. And as Chirag was making a point about tax implications, etc., a lot seems to be, in focus when you are buying gold. How much are you buying, the way that you are buying, and the kind of tax implications that there are. How would you break it down for consumers who are going to go step out and buy gold tomorrow?
It is very important that when you buy gold, first of all, you must select the proper shop owner from where you are going to buy gold. One important thing you must remember is that gold, there is nothing called brand in the gold. In fact, the BIS is giving the brand as a hallmark brand, and now which is available across the country in 256 districts. So if it is not like a shirt you are buying or some belt you are buying where the brand is visible. On gold, brand is not visible, so one should not go after the brand. Go to your Ghar Ka Sunar, which is your home goldsmith, and you can buy jewelry. Second important thing, you must buy only hallmark jewelry. Third important thing, ask your jeweler whether what are the after sale service available, how in case he wants to exchange the gold, what will be the gold exchange policy, what will be the policy if he in future he want to sell this gold back, and what are the freebies available apart from the gold jewelry which he is buying. So these are some of the things which one must look at it, and always buy gold along with the invoice, because unless you have an invoice, you won't be able to get all the facility which are available along with the gold. And also it all depends whether you want to buy a gold for a short-term duration, long-term duration, whether you are trying to buy gold as for the investment or for the consumption. If you are trying to buy gold for an investment, then one must go for gold coins or gold ETFs, as Chirag was saying. But if you are buying gold for consumption purpose, always go and buy gold jewelry.
Clearly, that is the ready reckoner on what you should be buying and how you should really be buying it. Colin, when we look at the current year as we are in, it started with a lot of disturbances. There's a war still going on, there are geopolitical tensions, there's an inflation, and there is a US Fed meeting that the markets are waiting to react to as well. How would you look at the gold prices itself? Because we have seen year-on-year gain in the last 5 years until now for gold. If you bought on a last Akshaya Tritiya, you'd be still sitting on strong gains, because last Akshaya Tritiya was perhaps 47 to 48,000 rupees. So at 51,000 plus, we still are on gains right now. How would you look at the macro scenario setup and the impact on gold?
So very difficult question, I would say. And with the way the world is going right now, with high oil prices, the Russia war, still not, the end is not in sight, rupee being weak, inflation in the US. So, everything which possibly could go wrong is going wrong right now in the world. In times like this, people will look at gold as a safe haven. And if things don't settle down very quickly in terms of American inflation, in terms of the war situation where everything is going, gold may have another bull run.
Okay.
So that's one viewpoint. But the second viewpoint is that if we have stability on all the macroeconomic factors that we mentioned, then gold may stabilize or be at a 5 to 10% increase from where we are today in terms of dollar terms. And the rupee, being stable or having its 3 to 5% depreciation, which we've had over the last, many decades, then at least consumers in India will still see a significant upside in the next 12 months to come. But if inflation continues to grow the way it is in the US and globally, then we may see another bull run in gold. So, we'll have to watch it very closely
clearly.
month on month.
The way this year has started, yes, there is just so much to watch out for. But also, Colin, when it comes to Akshaya Tritiya, is it only gold that people buy, or are people buying diamonds as well? Are people also focusing on that part of the segment?
They are focusing on diamonds, and diamond jewelry has become a larger share on the counter for sure in the last few years, and it continues to become a larger share for the simple reason that it's affordable. Today, in 20, 30, 40,000 rupees, the entry level price points in India, it's easier to get a piece of diamond jewelry than a piece of gold. But having said that, diamond jewelry continues to grow. What we are seeing a big upsurge is in the Jadao Polki segment. That has also grown very significantly in the last couple of years, especially because we are seeing Bollywood, wear that much more. But diamond jewelry growing, Jadao Polki growing, gemstone jewelry is really growing, and gold, believe it or not, has had a phenomenal run. So all in all, we've seen the entire jewelry segment show unprecedented growth in the last 12 months.
Mr. Mehta, I just have a follow-up question on what you said to us last, and this was about that gold has no brand, yes, but this constant conversation about organized and the non-organized sector that we look at in retail jewelry as a segment in the Indian market, how are you reading on that one?
You are asking me because
yes,
there are two Mehtas here.
This is Sridhar Mehta, yes.
Basically, this is to educate the buyer that gold does not have any brand.
Right.
We are not comparing who is organized, who is unorganized. Even if you are an unorganized jeweler, still you have to get yourself registered with the Bureau of Indian Standard and only sell the hallmark jewelry. So why to pay extra prices or extra money for a brand which has no value? Because the moment you buy the gold with at a higher price and with some brand value, when you go to sell the same gold, you don't get your brand value in return. So I don't see any reason, because we have seen people paying almost 20% higher prices even for a gold coin, 10 to 15% or 20% higher prices for gold coin. Now this is real waste of money. Please buy only hallmark jewelry and coins which are being certified by Bureau of Indian Standards.
And then
That is what is the brand in India.
And that it doesn't matter where you buy it from unless you have it hallmarked and you have your invoice in your hand there. I have a final question for you, Chirag, and this one is on how much gold should one have in portfolio? We've been talking about it last couple of years and we've seen it go from a single digit to a higher double digit. What is the market talking about or recommending right now?
So we have hard numbers to back it, right? It's about 10 to 15% allocation. At 15%, it peaks from its role of not impacting portfolio returns and substantially reducing risk. Above that 15% mark of allocation, you still have risk reduction, but at the same time, you compromise on portfolio returns as well. So 10 to 15% is that magic formula where it kind of adds a lot of benefits to your portfolio, right from enhancing your returns as well as reducing your risk substantially. So we stick to that 10 to 15% and it's time tested and it's worked wonderfully well for investors. So have an allocation of 10 to 15%. Most investors are underallocated. As Mrs. Surendra Mehta also said that you need to demarcate between what's for consumption and what's for investment and then decide how much you allocate it to gold. And if you're not at that 10 to 15%, I think this Akshaya Tritiya is a great time to have that allocated because gold is in its consolidation right now and periods of consolidation have proven that they are great times to add gold to your portfolio. Because we have seen that lockstep pattern in gold where gold consolidates, moves higher because of certain uncertainty and risk out there, from a macroeconomic perspective,
right.
And that leads to a run in prices. So overall, have that 10 to 15% allocation, and this Akshaya Tritiya is a great time to add not a token purchase, but you could add more to build that allocation.
Oh, absolutely. And especially if 20 to 25 to 30 tons of gold is bought on Akshaya Tritiya itself, then clearly you need to make a strategy when you step out to buy gold. As has been said, just check that it is hallmarked and you do take an invoice. And that's all that matters really, because there are new launches, schemes and offers, and gold prices coming off their highs is an incentive as well to add that gold in your portfolio, whichever way you do that. Mr. Colin, Shah, Surendra Mehta, Chirag Mehta, thank you so much for joining us on Commodity Champions. With that, it's curtains down on this edition. Stay with us. More news and updates on the other side of this quick break.